And the other thing I thought about is maybe I'm going to set up the world's safest bank. So naively, I got a few well-heeled friends together and well-connected people. We went to Singapore, and we went to Switzerland, and we went to the US, and we tried to set up this bank, and it was hard to do because the banking system doesn't want to allow entrants. They certainly don't want to allow people who don't operate in the same way. So I was kind of giving up, and a friend, one of my subscribers to Global Macro Investor, tapped me on the shoulder and said, you know what, you should look at Bitcoin. This is 2012. And I'd seen it because my job is as a macro guy is to look at all the investments around the world and figure out what's the most interesting to invest in. So I looked at it and I wrote a paper, which is probably the first paper that suggested that the scarcity of Bitcoin could be compared to the scarcity of gold. And if we compare them on a like-for-like basis, when gold was at $1,300, Bitcoin should be at $1 million if it's valued in the same way. And that became a very widely circulated piece of research because that was the first macro research on Bitcoin. And then I started investing in 2013. I bought it for the first time, went up 100% in a month. I'm like, holy shit, what's this? This is not normal. I sold it again. I thought, I need to think about this. I then rebought it and held it all the way through until 2017. Sold it like a genius. I'd made 10x. I was like the hero. I was punching the air. And then it went up another 10x after that. And I felt like an idiot. But, so is life. And then eventually I think of things in these kind of big macro trends, how the world interacts, and particularly around business cycles. When the economy goes up, the economy goes down. We know that when the economy goes down, it's weakening, bad things happen. It was already weakening in 2019. We were headed towards recession anyway. Then a pandemic comes. So my macro training teaches me to join the dots. Okay, so with this pandemic's coming, we're seeing that it's going to probably shut down the world. I saw that really early. I was really lucky and made some other investments around that. But what I knew is that the outcome was the central banks and the governments were going to print so much money. We couldn't believe it because we've just shut down the entire world for 3 months. So I thought now is the time for Bitcoin. Bitcoin is this store of value, and it's also a call option on the future financial system. And so then I became quite well known in this space because I was very vocal because I didn't want to let it happen again that happened in 2008 and 2012, that I could see what was happening and I couldn't tell enough people. So it became my absolute mission to educate as many people as possible about not only the opportunity here, but also the risks in the system itself.
And so we see this conversation around store of value being gold and the comparison then to Bitcoin. Can you explain how that comparison exists?
So why gold? Gold you can't destroy. It's an element that you can't destroy. So therefore it has longevity because almost all other metals erode in some way, shape or form. And most other assets, diamonds, yes, but there wasn't enough of them. And now we can create diamonds synthetically. But gold was expensive to get out of the ground. There was kind of a known amount of it and it was hard to get. So there was a restricted supply of gold that came onto the market every year. And every piece of gold that got mined could never be destroyed. It could be lost, but really, mostly, it would just remain in circulation. So that has what's known as a stock to flow. So there's a stock of stuff that is already mined, that's available. And then there's a small amount that comes onto the market every year. What you know is, therefore, if you want to buy gold, and a lot of people want to buy gold, the price goes up because there's not new gold. So you have to buy it from you. So if I want to buy your gold, Spencer, you can say, well, at what price? So that's why gold became an anchor for pricing. So in a world of fiat currency, inflation can happen or debasement of currency or other things. And gold became the kind of global currency. And the whole system was pegged on gold for hundreds of years. And gold has been used for several thousand years as a system of money. So I could pay you gold and buy a car from you. It's not that complicated to do, but it's doable. But it's a pretty clunky. Bitcoin comes along and it basically does this, but via technology. So you now can't increase the amount of mining because you've suddenly found a new mine in Papua New Guinea. It's a fixed number produced by mathematics that is impossible to change. So you know exactly the supply and you know exactly the stock. So now you've created something with scarcity. And because it's digital, it can never be destroyed because it's on the blockchain. The blockchain is basically a system of record. Normally, if we record something, if I sell you something, there's a ledger that says, I bought, you sold. But blockchain goes, I bought, you sold, and all of these people will confirm it. So that cannot be changed. So we don't go to court over it. It's just proven on the blockchain. So that solves gold in a way that was more useful for the current age, because we've now got the internet. You know, we've all bought and sold gold, and it's a pain. And you don't physically own it. And if you do, where do you store it in your house? And it's clunky and it's big, and it's not easy to make a payment for a coffee or a car. I mean, I can do it, but it's not easy because we have to agree on the price of gold, all of this stuff. The internet connects everybody around the world. Everybody's got a mobile phone. We need money and a store of value that operates in that system, global. And along comes Bitcoin and solves that. So, you know, I've just got off the phone to the founder of WazirX, who is the Indian crypto exchange. And like, Indians are the third largest adoption of crypto now, because they intuitively get it. Their population is now on average 26 years old. So these are millennials ruling India. They've grown up with gaming. They've grown up with digital stuff. So here they go. They look at their parents with their gold stash, thinking, oh, my mum's got all these gold bangles. What's the bloody use? But if I have Bitcoin, I can store it, I can transfer it, I can use it all the time. And it gets around the issue of the Indian rupee devaluing. It gets around the rising prices. It's like perfect for that generation. So India is going to be a vast market for this, because Indians intuitively understand store of value. And the young understand that this is digital store of value. So really exciting time.